You have just top up your SRS account and now you want to invest it into the S&P 500 index fund because Warren Buffett Gong Gong recommends it. But now comes the question, which S&P 500 fund should you go for? Because there are actually a few funds that's available. So in this video, I will give a full breakdown of everything you need to know about investing your SRS money into the S&P 500, which is the best fund you should go for, and which platform you should use to invest. Alright, let's jump right in. Okay, I'm sure most of you already know what the S&P 500 is, but just in case you don't, let me just give a quick intro so you don't blur later on, yeah? In short, the S&P 500 is an index tracking the largest 500 publicly traded companies in the US. So you have companies like Apple, Microsoft, Amazon, Google, and yes, Tesla. Almost 1/3 of the holdings are in tech, 14% in healthcare, and 10% in financials. Many people recommend the S&P 500 is because of two reasons. One is super diversified. By holding this fund, you are not just betting on one or two stocks to do well. You are betting on the entire S&P 500 to do well. So, for example, the real estate sector has been doing quite badly this past year. But this is not an issue because other sectors like tech and industrials have been doing well. As a result, they managed to negate the losses and pull up S&P 500 during this period. So, that's the magic of diversification. Second, the way how S&P 500 works is by removing underperforming companies and adding in more profitable companies. Or in other words, it's doing a momentum strategy where it's constantly pushing the winners to the top while removing the losers. And that's how the S&P 500 was able to give an annualized 12% return over the long term. But this doesn't mean that it will keep giving this kind of return in the future, yeah? So that was a quick intro about the S&P 500. Now, let's talk about how you can invest in it. Quick pause. Some of you may be wondering, where do I get my stock news and financial data from? Let me introduce a platform that I use a lot. Seeking Alpha. With Seeking Alpha, you are able to easily check out companies' financial reports, stock valuations, analysis, and even earnings call transcripts. There's also a section which lets you compare a company to its competitors, which may be useful for doing research. The basic version of Seeking Alpha is totally free to use. With it, you will have access to all the stuff that I mentioned just now, plus daily newsletters and financial news. But if you do decide that you want more stuff, such as unlimited access to premium contents, author ratings, stock dividend grades, quant ratings, and more, you can sign up using my link down below to get a 14-day trial period to try out Seeking Alpha for free. So with that being said, let's get back to the video. For cash investments, there's a whole bunch of S&P 500 funds that you can invest in. But for SRS, the list is a lot smaller. Okay, let's go through it. The four funds that are available are Spider's S&P 500 ETF Trust with the ticker symbol S27, Dimensional US Core Equity Fund, Lion Global Infinity US S&P 500 Stock Index Fund, and the Amundi Prime USA Fund. Okay, strictly speaking, the Dimensional Fund and the Amundi Fund are not exactly a S&P 500 fund because the Dimensional Fund is holding over 1,900 companies in the US and the Amundi Fund tracks large and mid-cap companies. But don't worry, yeah, their performances are quite similar to the S&P 500 and they have a very high correlation to the S&P 500. That's why Endowus recently replaced the Lion Global Fund with the lower cost Amundi Fund. Next, let's talk about domicile. Depending on where the funds are domiciled at, there's two implications. One, dividend withholding tax. For US domiciled funds, it will be a 30% dividend withholding tax. And for non-US domiciled funds, it will be a much lower 15% dividend withholding tax. For US domiciled funds, if you pass away, there will be up to 40% estate tax on your investments. Or sorry, not your investments, it's your descendants' investments now. So in short, if you want to save on taxes, you can go for non-US domiciled funds. Next up, expense ratio. This is the fund level fee that the fund manager charges to manage the funds. Yes, of course there's a fee. You think what? The the fund manager eat air, drink rainwater. For this, the Lion Global Fund has the highest expense ratio. But because Endowus has a 100% cashback on trailer fees, if you invest via Endowus, you will pay a much lower expense ratio. Okay, just in case you don't know what's trailer fee, it's the fee that the fund manager pays to the distributor, in this case, Endowus, for helping them to sell the fund. So rather than taking a fee, Endowus just use it to offset the fund level fee. For platforms, this is quite straightforward. For the SPDR ETF, you can only buy it through Poems. The rest of the funds are available on Endowus, while for Lion Global Fund, it's also available on FSN1 and Poems. Next, dividend handling. The SPDR ETF distributes its dividends every quarter and currently has around 1.13% dividend yield. While for the rest of the funds, they just reinvest the dividends back into themselves and activate the magic of compounding. Next, the SPDR ETF has a super duper low 211 average trading volume. This is super bad because when there's very little trading volume, it will have a very wide bid-ask spread. For example, here, the bid-ask spread is about 66 cents wide. Meanwhile, the rest of the funds are mutual funds. Their price doesn't depend on the trading volume, so there's no bid-ask spread. Instead, you will only get one price a day. So, which fund should you go for? We can immediately ignore the SPDR fund because it has a high tax and CB-backed trading volume. As for the remaining funds, the easiest method is to choose the fund with the lowest expense ratio. In this case, it will be the Amundi fund. But you also need to remember that Endowus charges a recurring platform fee every year, and the fee is based on percentage. So, the more you invest, the more fee that you have to pay. So, an alternative is to choose the Lion Global Fund, which is available on FSN1 and Poems. But, which is better? Okay, let's compare the fees for when you buy the two funds on different platforms. First up, you will notice that Poems doesn't charge any trading fee, annual fee, foreign share custody, and dividend processing fee. That's because this is a fund, and Poems doesn't charge any fees when it comes to funds. Meanwhile, the rest of the platforms charge an annual fee. Endowus charges 0.3%, while FSN1 charges 0.0875% or 0.05% depending on your portfolio size. Now, let's find out which is the cheapest. When you add up all the fees, the winner is the Amundi Fund, bought via Endowus. So, if you were to invest $100,000, each year, the fee would only add up to $350, while the rest have way higher fees. That's because while Endowus charges a 0.3% annual fee, the fund has a very low expense ratio due to Endowus' 100% cashback on trailer fees. And of course, if you want to sign up to Endowus or any other platforms, you can sign up using my links down below here. Or if you have any more questions, you can join my fast-growing Telegram group to ask me or the members any questions that you may have. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.